Government Grant, Philippine Accounting Standard Number 20. This is in page 387 book by Valix, chapter 16.
Next, we are going to talk about government grant or government assistance. So they are considered as an investment actually. And let's see how we are going to treat them accordingly. So first, let's talk about government grants. Government grants as assistance is actually as an assistance by government in the form of transfer of resources to an entity in return for part or future compliance with certain conditions relating to the operating activities of the entity. So this is an inclusion for investment because when you give something, you expect in return. So this is the investment that we are going to talk about. All right. So let us look at the two types of government grants provided to entity. The accounting treatment for government grants are associated with two types, and that is grant related to asset and grant related to income. So first, we will tackle the grants related to income, how we will treat this as an income. So just to know, for everyone's knowledge, we should acknowledge that government grant shall not be recognized on a cash basis. However, this should be recognized in the form of income. And this, if we go abiding with the cash basis, this is against the general accepted accounting principle. So therefore, we should use the income approach for now. So here is the following accounting for government grant. And as I've stated, I have formulated some steps here for us that is useful to help us calculate the income, to use the income approach in this way. First, the first steps, these are the steps to calculate the income from government incurred for the period. So first, we take the ratio of each expenses over the period. So expenses may include environmental expenses or any safety measurements towards the environment as well as the people. So it is monetized and it is calculated for a certain value. So each expenses are divided into a number of periods. It could be up to 3 years and more or less. So usually it's 4 to 3 years. So we would take the ratio of each year. For example, the first year is 3 million, the second year is 4 million, the third year is 5 million, giving us a total expenses 3 million plus 4 million plus 5 million. That gives us a total of 3 plus 4, 7 plus 5, 12 million pesos of expenses. So to calculate the ratio for the first year is 3 million over the total expenses, which is 12 million pesos, which gives us a ratio of 1 to 4. So we have to do that. Why? We will find out later on. Next, we will calculate the amount of deferred income for the year based on the percentage or ratio allocated. So each in this situation, we would account these grant income through deferred grant income first, and then we will associate the grant income. We would recognize the grant income for the current period only. So the grant income is limited as to the useful number of years or useful life of the asset. So take note, hindi ko alam paano ito Tagalogin. Pero basically, kailangan lang po natin i-focus, i-recognize yung income for that period or for the accounting period itself in this income approach. Yun po. So we'll also use the ratio or the percentage, and we'll go through the situations later on. And then of course we do have, after knowing these ratios and the percentage of each, we should then journalize as to the first step of accounting treatment or accounting procedure. So first, we would acknowledge the grant obtained in the form of grant income, not by cash as mentioned. Second, acknowledge the grant income for the period using the calculated amount, so which is the initial step kanina for the second part. And then acknowledge the expenses incurred or assets acquired by the year or for the year. Let us go through the situations. So first, we have the specific situation here, wherein we have a grant in recognition of specific expenses shall be recognized as income over the period of the related expense. So like I've mentioned just now, expenses, how we will use the grant income to reduce our expenses. Let's go through that. So here we have an entity received a grant of 10 million pesos from the national government for the purpose of defraying safety and environmental expenses over the period of 2 years. So we know na 2 years ito, and the given situation and the given amount of expenses, the first year 4 million pesos, the second year 3 million pesos. So it gives us a total of, for the 2 periods, 7 million pesos. So to find the ratio, it's basically for the first year 4 over 7 or 4 to 7, and then the second year we have 3 to 7. So let's calculate for the first year first. So the journal entries are as follows. Of course, you will recognize the grant income received. However, it is unearned, or it is, what do you call this? It is an unearned revenue. It is treated as a liability. And of course, to do that, we would debit cash. Just pretend that we've got the income in the form of cash by the, what do you call it? We got the grant from the government in the form of cash. So we would debit cash and then credit deferred grant income. Like I said, we haven't earned this kasi binigay na sa atin in advance. Income received in advance but not yet earned. Unearned revenue. So we would treat it as liability. So this is where we recognize the income for the period. Like I've mentioned, the percentage, the ratio. So to do that, over the 2 years, we have the first year of 4 to 7 kanina. 4 million over 7 million. And then, so once you've got that, you would get 5,714 and 286 pesos. So that is where we would recognize the grant income by doing the following transaction, which is number one, for the second one, we have debit deferred grant income and then credit, grant income to recognize the income. This is the income approach. We reduce the liability incurred because we will recognize now the income that we received or we have earned now. Okay, that is for the period. And then of course, the third, what I've mentioned for the second steps of journalizing the transaction is to recognize or generalize the expenses or assets acquired. So what we should do is basically recognize the expense for the first year, which is 4 million pesos, and then treat it or assume that the payment was made through cash. Next, of course, besides expenses for grants are also given to the acquisition of assets. And there are two types of assets. First is the depreciable asset, and the second is non-depreciable asset. So what will we do? How do we account these depreciable asset? That is the situation here. Grant related to depreciable asset shall be recognized as income over the periods and in proportion to the depreciation of the related asset. So I've mentioned, let's go through that. An entity received a grant of 40 million pesos from the Canadian government for the acquisition of a chemical facility with an estimated cost of 70 million pesos and useful life of 4 years. So we do know that there's a 4 years. So when there's a depreciable asset, do take note that we should depreciate this. And there are various methods, but here stated is that straight line method is used. So the grant allocated as income should be corresponding with the useful number or the useful life of the asset, which is 4 years in this situation. So the following journal entries are, first, we would recognize the income unearned. So we would debit our cash and credit deferred grant income of 40 million pesos. And then second, I skipped through the last part, which is to recognize the acquisition of the asset. So we would debit building, which is 70 million pesos as stated there, and then of course credit cash. Let's just assume that the payment was made through cash, but it could be cash in bank or cash at bank rather. Third, of course, is to recognize now the income for the first year. How do we do that? Basically, the grant of 40 million pesos divided by 4 years. So for the first year, it is 10 million pesos. And so, the deferred grant income will be debited. I-debit po natin ang deferred grant income. Credit grant income of 10 million pesos. And then, of course, like I said, depreciable siya. So what we would do is do the straight line method, which is the amount. There is no residual value or anything, so we just have the amount itself divided by the useful life or useful number of years, which is 4 years. So 70 million divided by 4, we have 17,500,000. So we would debit depreciation building and then credit to accumulated depreciation building. That is how we record for depreciable asset. Next, let's proceed to non-depreciable asset. So grant related to non-depreciable asset requiring fulfillment of certain conditions shall be recognized as income over the periods which bears the cost of meeting the conditions, meaning the construction. The cost of meeting the conditions, meaning the constructions. Okay, so as according to what I've stated just now in the International Accounting Standard number 16, it is to recognize that construction of an asset shall be recognized as well. So therefore, how do we treat this? What is the accounting for this? So let's give an example here. An entity is granted a large tract of land in Mindanao by the national government. The fair value of the land is 70 million pesos. The grant requires that the entity shall construct a refinery on the site. So refinery is a maintenance for the land itself. And the cost of a refinery is estimated to be 120 million pesos and the useful life is 25 years. So this is non-depreciable because land itself does not depreciate but it rather appreciates. So the journal entries are as follows. First, because we have acquired a land here not instead of cash to match our expenses, we would then use land account, debit land, and then of course credit the unearned income. So debit land and then credit deferred grant income of 70 million pesos because that is the fair value of the land acquired. However, for the refinery on the other hand, let's pretend that this is obtained through cash. So we debit refinery 120 million pesos and then we credit cash of 120 million pesos. Why do we debit land instead of refinery? Because it is stated here that the entity is granted a large tract of land, not the refinery. So we would only refer to the land that is granted by the government as their investment towards this entity. Okay. Next, we have to recognize the income as an income approach. So we would debit deferred grant income to reduce the liability and recognize the income by crediting grant income. So debit deferred grant income, credit grant income of 2,800,000 pesos. So how did we get 2,800,000 pesos? Basically, 70 million divided by the useful number of life, which is 25 years. So 70 million divided by 25 years, that would give us 2,800,000 pesos. And then of course, we would depreciate our refinery. These are the facilities to maintain the land itself. So refineries are depreciable, although land are not depreciable. So we would depreciate the the refinery rather, by getting the amount of 4,800,000 pesos. 4,800,000 pesos are derived from the 25 years that is divided by the 120 million divided by the 25 years, the number of useful life. So that is how we will get the amount. And so how do we treat or generalize this transaction? Debit refinery, debit depreciation refinery, and credit accumulate depreciation refinery. Of course, there Of course, there are situations where government grants are provided as an immediate income, an immediate approach, expenses or loss for immediate compensation for expenses or loss. These are through calamities like natural disasters or typhoons, okay, earthquakes. So for this situation, a government grant that becomes receivable as compensation for expenses or losses already incurred, or for the purpose of giving immediate financial support to the entity with no further related costs, shall be recognized as income of the period in which it becomes receivable. So it's only for that certain period, and usually it won't really prolong. Usually it's for one period only, so it's very direct. What we will do is, for example, an entity received a grant of 50 million pesos from the Australian government to compensate for massive losses incurred because of a recent typhoon. So what we will do here, there is no specific way of what is obtained here, so we would acknowledge it as cash of 50 million pesos and credit the receivable of grant income, the income that we have earned, which is 50 million pesos as well for that period. Let us now look at the asset approach. The grants related to assets basically refers to deduction on the asset itself for the grants received. Okay, so how do we do that? First, we would acknowledge the acquisition of the asset, and then after that, we would reduce the value of the asset as a recognition for the grant income. And so here's a given example. An entity received a grant of 40 million pesos from the Canadian government for the acquisition of a chemical facility with an estimated cost of 70 million pesos and useful life of 4 years. So as usual, we would use a straight line method. We should always depreciate our depreciable asset for the period itself. And so we will generalize the transaction here. First, we would debit building and then credit cash, 70 million pesos as acquired there. Now, what we would do is to recognize the grant income through asset approach. So what we will do is just reduce the value of the grant, reduce the value of an asset according with the grant itself. So we have the following transaction here. Debit cash, because we have received cash from the government of 40 million pesos, and then we would it says here that we received grant of 40 million pesos from the Canadian government. So as an asset approach, we would reduce the value of an asset, credit building 40 million pesos. So this is to record the government grant as a deduction from the cost of an asset. And then lastly, we would recognize the depreciation of the building. So that is inevitable. We should do that always to our principal. So we debit depreciation building, credit accumulate depreciation building, and that gives us a value or an amount of 17 million pesos 500 pesos. I hope na clear po yun sa inyo. Next, we will talk about the government assistance. What is government assistance? Government assistance is the carrying amount of an item of property, plant, and equipment that may be reduced by the government grants in accordance with International Accounting Standard number 20, accounting for government grants and disclosure of government assistance. And so that the government assistance or these PPEs are actually considered through two models, and those are the costs and the revaluation model. So let's go to the cost model first. Basically, the cost models is how we would arrive with the fair value of our with the fair value of our, not really the fair value, rather the net value of the asset, which is the historical cost minus the accumulated depreciation minus accumulated impairment loss as well. That is for the cost model. Whereas for revaluation model, it is the fair value of an asset minus any subsequent accumulated depreciation for the period itself, minus the subsequent accumulated impairment loss. That is the difference between the revaluation model and the cost model. For the cost model is the accumulated, whereas for the revaluation method, it is for the measurement time given according to your circumstances in the company. And then of course, revaluation model, it depends on the carrying amount of an asset. Now, the carrying amount of the asset can both decrease and increase. Now, what if the carrying amount of an asset increase? So, therefore, when the carrying amount of the asset increase, we would just debit or we credit it to the equity account under evaluation surplus. However, what if naman meron ng impairment loss, there was an impairment loss before prior to the recognition of the increase in carrying amount. So what we would do is we would credit it to income instead of equity. Why? This is to reverse the deducted impairment loss incurred in the profit or loss account. So we would credit it to income to acknowledge the increase in carrying amount of the asset. So that is when there's an impairment loss before. However, what if the carrying amount of an asset decreases? So what we would do, if that is the case, then we would debit it to expense to profit or loss. However, if the carrying amount decreases and there was an impairment loss before, what we would do is, not impairment loss, there was a revaluation surplus, then what we would do is we would debit it to equity to reduce or reverse the revaluation surplus incurred prior to the acknowledgement. So, gagawin natin, ilaless natin sa equity natin kung may revaluation surplus before.
Acquisition is the process through which one entity gains possession or takes over the ownership of a particular plant, property, and equipment. There are three types of acquisitions of property, plant, and equipment, which are acquisition on a cash basis, acquisition on account, and acquisition on installment basis. The first one is the acquisition on a cash basis. Dito, the cost of an item of property, plant, and equipment is the cash price equivalent at the recognition date. The cost of an asset acquired on a cash basis simply includes the cash paid plus directly attributable costs such as freight, installation cost, and other costs necessary in bringing the asset to the location and condition for the intended use. For example, if bumili ang company ng office equipment worth 20,000 pesos and may freight cost na 2,000 and installation cost na 1,000, ang amount na ire-record sa equipment ay yung total ng lahat ng cost, which is 23,000. The next one is acquisition on account. When an asset is acquired on account subject to a cash discount, the cost of the asset is equal to the invoice price minus the discount, regardless of whether the discount is taken or not. Cash discounts are generally considered as reduction of cost and not as income. For example, kapag bumili si company ng equipment on account for 200,000 pesos na eligible for a 2% discount on trade credit if the amount due is paid within 10 days, ire-record ang equipment as debit equipment 196,000 and credit accounts payable 196,000. If mababayaran yung payable within 10 days, ang magiging entry ay debit accounts payable, credit cash 196,000 amount ng parehas. Pero kung hindi naman, ang magiging entry ay debit accounts payable 196,000, other losses 4,000, debit ulit, at ang credit naman ay cash 200,000 pesos. And the last one is acquisition on installment basis. When payment for item of property, plant, and equipment is deferred beyond normal credit terms, the cost is the cash price equivalent. If an asset is offered at a cash price and at an installment price, the asset shall be recorded at the cash price. The excess of the installment price over the cash price is treated as an interest to be amortized over the credit period. For example, kapag bumili na equipment na may cash price of 270,000 and installment price of 300,000 at may terms na 50,000 down payment at ang balance ay payable in 4 equal annual installment, which is 62,500 per installment, ang magiging entry upon purchase and down payment ay debit equipment 270,000, other financial charges 30,000, and credit accounts payable 250,000 and cash 50,000. Sa first installment naman, ire-record siya as debit 62,500 accounts payable at interest expense 7,500 and credit other financial charges 7,500 and cash 62,500. As a recap, ang tatlong acquisition of PPE ay acquisition on cash basis, acquisition on account, and acquisition on installment basis. Sa cash basis, kasama sa amount ng PPE ang cost na nagastos sa pag-deliver at pag-install ng PPE at lahat ng attributable costs. Sa on account naman, ire-record ang amount ng PPE as cost minus discount, and sa installment basis naman, ang cash price ang ire-record at i-charge na lang as interest expense ang excess na installment over cash amount. The recognition means that the cost of the property, plant, and equipment together with the related accumulated depreciation shall be removed from the balance sheet. PA 16, paragraph 67 provides that the carrying amount of an item of property, plant, and equipment shall be recognized on disposal or when no future economic benefits are expected from the use of disposal. The gain or loss from the recognition of PPE shall be included in profit or loss, and gain shall not be included in revenue but treated as other income. The gain or loss arising from the recognition of an item of property, plant, and equipment shall be determined as the difference between the net disposal proceeds and the carrying amount of the item. For example, if ang carrying amount na equipment ay 3K, tas naibenta ng 2,500, nag-accumulate ng loss of 500 pesos ang recognition ng PPE. Meanwhile, kung 3,500 naman na ibenta yung PPE ay nag-accumulate naman ng gain na 500 pesos yung recognition. The next concept is fully depreciated property. A property is said to be fully depreciated when the carrying amount is equal to 0 or the carrying amount is equal to the residual value. In such a case, the asset account and the related accumulated depreciation accounts are closed and the residual value is set up in a separate account. The cost of fully depreciated asset remaining in service and the related accumulated depreciation ordinarily shall not be removed from the accounts. Entities might keep on using the non-current asset until it becomes completely worn out, useless, and worthless, or sell off the non-current asset at the end of its useful life either by selling it as a second-hand item or as a scrap.